Hello, how are you doing? You are welcome to another video in our first one channel. So as you can see to the top left of my screen, today we are going to be talking about video 13, right, which says Introduction to Smart Money. Do people control the Forex market? Guidelines on how to trade like smart money. Then in bracket, checklists. So again, introduction to smart money. I'm going to be introducing you to what smart money is, who they are, and everything, and then go down to the people control the Forex market. So at the end of me explaining to you and showing you things about smart money on the internet, you should be able to decide if people trade like if people control the Forex market or not. And then lastly, we're going to be looking at the guidelines on how to trade like smart money. So I'm going to be giving you how the checklist we use in trading smart money concept. All right. So quickly, let us go to open a new tab and then click on Wikipedia. All right. And then let's type in Forex. All right, and then click on enter. Okay, so we just zoom this so you can see. All right, so foreign exchange markets, that is Forex, FX, or currency markets, just the same thing as a global decentralized or over-the-counter OTC market for the trading of currencies. So you already know what that is, right? We trade currencies with Forex. And then if we come down, let's come down to then it talked about the history, and then, this website, this Wikipedia, when you just type in for it, there's a lot of information you're going to see here. So I would advise you just take your time. Maybe probably you go through it from the beginning just to have a better understanding of what you're going to be dealing with, right? Because you want to have the understanding, you want to know how to trade before you want to know what's up. What is it I'm trading? What is it I'm about to put my money into, right? So do the research and everything. Come here to study the history, the ancient, and then the medieval and later early modern, all of that just gives you the history about Forex trading. Okay. But we're not going to be doing that on this call. And then under this area where it says market size and liquidity, it says the foreign exchange market is the most liquid financial market in the world, right? And then it goes on to say include traders include government and central banks, commercial banks, and other institutional investors and financial institutions, currency speculators, other commercial corporations, and individuals. According to the 2019 Triennial Central Bank Survey, coordinated by the Bank of International Settlements, average daily turnover was 7.5 trillion in April 2022. Now, what this means is that the amount of money that goes around in circulation in the Forex market on a daily basis amounted to $7.5 trillion. That's a lot of money. That is a lot of money. And then this just talks about, this shows us how the Forex market is even getting more liquid year by year. And then it says in bracket, compared to 1.9 trillion in 2004. See it now? So as of 2004, the total amount of money that was in circulation, daily turnover was $1.9 trillion. But within the space of 2004 to 2022, which is last year, the amount of the daily turnover in the Forex market has increased from $1.9 trillion to $7.5 trillion. This is a lot of money in circulation every single day. So if we have 5 trading days, Monday to Friday, and on Monday, we have about 7.5 trillion in circulation. So if Monday daily turnover is 7.5, and then we're going to multiply that all by 5 to give us the whole week, that means we have about $37.5 trillion in circulation every single day. That is a lot of money in circulation every single day. Monday, we have $7.5 trillion in circulation. Tuesday, we have $7.5 trillion. And that's even as at 2022. This is June 2023. We don't know. It could have been more than $7.5 trillion. And then it says, of this 6.6 trillion, 2.1 trillion was spot transactions and 5.4 trillion was traded in outright forward swaps and other derivatives. And then foreign exchange is traded in an over-the-counter market where brokers slash dealers negotiate directly with one another. So there is no central bank or clearinghouse. The biggest geographical trading center is the United Kingdom, primarily London in April 2022. Trading in the United Kingdom accounted for 38.1 of the total, right? So there's a lot of information in this page. Just come to Wikipedia, type Forex, and just click enter, and then it's going to bring all of this information for you. Just like how I have access to it, you also have access to it, right? So this a lot of information. But then, since I'm going to teach you about smart money. That's why I'm bringing this now. This So this is where we are going to be spending quite a number of time, right? So under market participants, right? Under market participants, it says, unlike a stock market, the foreign exchange market is divided into levels of access. Okay, so Forex market is divided into level of access. At the top, which is the highest, right, is the interbank foreign exchange markets. Then when we click on to just put the mouse over it, see the interbank is the top level foreign exchange market where banks exchange different currencies. The banks can either deal with one another directly or through electronic broking platforms. The electronic broking services, that is EBS, and Thomas Reuters dealing are the two competitors in, I believe, in the industry, right? But then at the top, the Forex market, the foreign exchange market is divided into level of access, right? And we, you, me, you, and a lot of us, right? We retail traders, small traders, we are the lowest level possible, right? We are the lowest level, and that's because we have the least amount of money it takes to the, do transactions in the forex market. At the top is the interbank foreign exchange market. This have, and which is made up of the largest, as you can see, which is made up of the largest commercial banks. And then when we click a mouse over the commercial banks, it says the commercial bank is a financial institution which accepts deposits from the public and gives loan for the purpose of consumption and investment to make profit. See it now, investment to make profit. That's where we have banks like, JP Morgan. So JP Morgan Chase and Co. Is an American multinational financial services firm headquartered in New York. So it says it is the largest bank. It is the largest bank in the United States and world's largest bank by market capitalization. So JP Morgan is a very big bank. All right, but then let's continue. It says uh, which is made up of the largest commercial banks and securities dealers. Within the interbank market spread, which are the difference between the bid and ask price. If you start trading, you will know what spread is, right? Like when we want to get in, maybe I want to buy Euro USD, for example, there's what we call spread, right? Spread is the difference from where my entry is to where the broker is actually going to fill me in. So if I want to buy at, let's say, Euro USD, I want to buy at 1.1000, not like 1.1000. Now that's what I want to get in. The broker can have like a 3 pip spread. If there's a 3 pip spread, it means even if my entry is at 1.1000, the broker will actually fill me in at 1.1003. See, now there's a 3 pip spread difference, right? So we also experienced that, right? So within the interbank market, spread, which are the difference between the bid and the ask price, are razor sharp and not known to players outside inner circle. And then it comes down to say the difference between the bid and ask prices widens. For example, from 0 to 1 pip, 1 pip, 2 pip for currencies such as euro, right? So let's continue. So as you go down the level of access, this is due to volume. If a trader can guarantee large number of transactions for large amounts, they can demand a smaller difference between the bid and the ask price. Let's come again. This is due to the volume. I'm reading from here now. Okay. This is due to the volume. If a trader can guarantee large number of transactions for a large amount, that means you have a very big amount of money, you can demand a smaller difference between the bid and the ask price. Even we have some brokers that offer us zero spread. So that we have zero spread account and then we have a spread account. Just like the zero spread account, you have to pay more. The broker is going to charge you commissions and all. Yes. So if you do not want a spread, you want to get in exactly at where your limit is. You want to buy Euro USD 1.1000. That's where you want to get in. Then probably you have to pay for a zero spread account, and then the broker is going to charge you commissions per trade. All right. So yes. So it says, let's continue from there. Uh, let's start again. This is due to the volume. If a trader can guarantee a large number of transactions for large amounts, they can demand a smaller difference between the bid and the ask price, which is referred to as a better spread. So yes, so brokers do have better spread accounts. Yes, I know Pepperstone does. Pepperstone does have one. They call it uh the Razor account. Yes, the Razor account has a zero spread account. Yes. So the levels of assets that make up foreign exchange markets are determined by the size of the line, and in brackets the amount of money with which they are trading. Right. Remember, the forex is divided into level of assets, and this access is determined by the size. The size, what I'm trying to say, is the amount of money with which they are trading with. Like I said, we retail traders are on the last level, right? Because we do not have the amount of money it takes to be in the same level with these big guys. Okay, so these people are what we call smart money now. Are you beginning to see it? So smart money itself is what we mean when we say smart money. We're trying to refer to these big players in the market, right? Because already the beginning has told us that the foreign exchange market is divided into levels of access. And now Daniel is further clarifies what it means by level of access. That is the amount of money people are using to trade. Right? It is determined by the size. So these people are the top. They have a very big amount of money, like very, very big amount of money they used to trade. And then we have a couple of thousands, some $100, some 100K, $200,000, $1 million. It's still very small compared to the amount of money these institutions are using to trade. So we call them in brackets smart money, right? These are institutional traders, smart money traders, right? Exactly. So that's where the word came from. So smart money, we're referring to these big players in the industry as smart money, right? And then when we say smart money concept, what we're trying to say is we've built an entire trading plan, a trading strategy around smart money. You understand? So that's where the checklist comes into play and all of that. I'm going to show you that later. All right. So let's continue from here, which is referred to as better spread. The level of assets that make up the foreign exchange market are divided by the size of the quote line, right? The amount of money with which they are trading. The top tier interbanks that the top tier interbank market accounts for 51% of our transaction. So let's go back again where we said the daily turnover as at April 2022 was $7.5 trillion. And now coming down here, now I say the top tier interbank market account for 51% of all transactions. So the interbanks alone amount for more than half already. It is 1% above half. So see it. Then it goes from there, smaller banks, followed by large multinational corporations. I think is that where we have financial institutions. Okay, so followed by, where am I reading from now? I'm reading from here now. Followed by multinational corporations, which need to hedge risk and pay employees in different countries. This is where this one talks about the commercial companies now, like Apple, Microsoft, and all of that. And then goes on to say larger hedge funds and even some of the retail market makers. According to Galati and Melvin, pension funds, insurance companies, mutual funds, and other institutional investors have played an increasingly important role in financial market in general, and in FX market in particular since the early 2000s to 2004. 2004, in addition, in notes, hedge funds have grown markedly or madly over the 2001 2004 period in terms of both number and overall size. Central banks also participate in the foreign exchange market to align currencies to their economic need. Okay, and then goes down to talk about the commercial companies, central banks, foreign exchange fixing, investment management firms, retail foreign exchange traders. So you can just take our time to really read through all of this, right? It's going to give you a lot of information on the forex market, right? But then looking at this area here, you can see the top heading here says the top 10 currency traders, right? And then percentage of overall volume since June 2020. So as of June 2020, this was the percentage of the overall volume, as the overall forex market, right? Top 10 currency traders. So currency traders we have in the world, the top 10, JP Morgan ranks number one. So if we check JP Morgan now, this is JP Morgan Chase and Co. is an American multinational financial services firm headquartered in New York City, incorporated in Delaware. It is the largest bank in the United States and the world's largest bank by market capitalization. See now, JP Morgan ranks number one in the rank. So it's at the top 10 currency traders. And then number two, we have UBS. Number three, number four, number five, number six, seven, eight, nine, and 10. Looking at their country now, we can see that the United States flag has about 1, 2, 3, 4, 5, 6. So even among the top 10, 6 of them are from United States. So you see now why US is very important. So these top 10 currency traders are what we call smart money. Okay, these are people, actually human beings like you and I, that run these companies. Okay, but because of the amount of money, they have so much money, you understand, if they have a way of manipulating price, they have the way of moving price to their favor. That is why maybe when when news is about to drop, can say, oh, JP Morgan wants to push price up, JP Morgan wants to do this. So you're gonna hear that a lot amongst my money traders. All right, we make reference to these top 10 currency traders because they have a very big amount of money and they have a way of manipulating price to their favor. That is why we've seen some kind of lawsuits against these companies. For one company is suing JP Morgan for manipulating the forex markets, something like that. We have that online step. Just check it out. You're going to see it. And then some other companies also. This just proves the fact that this market is controlled. Remember, The second thing is, do people control the Forex market? So that's something I want you to understand, that yes, people actually do control this market. Okay, there are people that determine the market, where it's going to go to, how long is it going to get there. And people determine these things. Human beings like you and I determine these things. All right. So yes, the Forex market is controlled, not by aliens, but by like human beings like you and I. Okay. And then we have the top 10 currency traders, the JP Morgan, UBS, XTX, and the rest. Okay. These are the top 10 currency traders. Now, also, if we go to, and then we also have, like in this place where it says commercial companies, said an important part of the foreign exchange market comes from the financial activities of companies seeking foreign exchange to pay for goods and services. Now, a very good example can be, let's say Apple, for example. Right? Apple is a very big commercial company in United States, right? And let's say Apple wants to go into partnership with UK, like with the they want to with a company in UK, right? Maybe you want to purchase a glass that they will probably want to use for the next iPhone series, right? That's where they want to get the glass from the screen, right? So they have to go into partnership with a company in UK, for example, to go into business, right? And then Apple is going to pay the company in UK pound, and then the company in UK is going to send the glass, like they're going to transport the glass to US to deliver it to Apple. Right? That's an example of a transaction. And so you can see Apple deals with United States dollar because the companies in US, but then they have to pay in pound, right? So the exchange rate can affect, because we're talking about a very large amount of transaction between these two companies. Now, if the exchange rate is not in favor, Apple will tend to pay more than what they're supposed to pay, right? So an important part, again, an important part of the foreign exchange market comes from the financial activities of companies seeking foreign exchange to pay for goods and services. Then it goes on to say, commercial companies often trade fairly small amounts compared to those of banks and speculators. And their trade often their trades often have a little short-term impact on the market rates. Nevertheless, trade flows are an important factor in the long-term direction of a currency's exchange rates. Right. So now another one I want to show you is, if we come to um, Google and put CFTC, that's the Commitment of Traders Port, and then come to Commodity Futures Trading Commissions. All right, let's wait for it to load up. Yes, CFTC now. Yes, to change the coin, I think it's there. Data. Oh, it used to be down here. Let me check. CFTC. Let me see, COT. Let me see if we're gonna see it. Okay, yes, this. And then we come to current legacy reports under the Chicago Mercantile Exchange. Come to short formats. Exactly. So let's come to Swiss. I'm looking for the euro now. So Euro FX. Okay, oh, let me come back again. Short formats. Euro FX. Thought I saw it just now. I'm gonna Euro shorts. Swiss. Yeah, Euro FX. See, yeah. Right. So this is cftc.gov website, right? So this website shows us the amount of positions that the commercial companies and the non-commercial companies, the amount of euro they are buying or selling, right? In total, like it is mandatory for these companies to give out their positions to CFTC every Tuesday. And then CFTC is going to process the data and then release it to the public on Friday. You see it now. So every Friday, we used to have a new report, right? And then what does this report says? First, we can see Euro FX, Chicago Mercantile Exchange futures only position as of 6/20/2023. That's, I believe, should be last Friday. 20. Oh, on Tuesday. Yeah, so it is on Tuesday, but they usually release it on Friday, right? They release it on Friday, but we're gonna see Tuesday's date there. So now under this, we have the non-commercials and the commercials, and then we have total and a non-reportable positions, right? Non-reportable positions. Now, under the non-commercials, you can also see long, short, spread. And then the commercials, we have long, short, and then total, we have the long, short, and then non-reportable positions, long, short. Now, these commercials, just like I said, these are commercial companies that trade Forex in order to just edge, right? They're trying to come back here again. It says the trade seeking foreign exchange to pay for goods and services, right? They just want to balance up business, right? And then the non-commercials, this is where we have the JP Morgan, all of these institutions that are trading majorly to make profits out of the market, out of the Forex markets. Now, it is mandatory for them to give out their positions to CFTC, and then they process it and then they release it on Friday, right? But then we usually get Tuesday's dates, but actually on Fridays when it is released out to the public, right? Exactly. So the long position, this long means the total amount of non-commercials, total amount of long positions. The non-commercials, all of them, how many people are buying, how many positions are they buying, going long, and then how many positions are they selling? As you can see, the non-commercials here, as of last week, they're buying, a lot of them are buying, they're going long about 229,399 contracts to the upside. And then the short format, we have the 84,750. This already is telling us that more of the institutions, these institutional traders are buying euro than selling the euro. And then the commercials are selling more of euro than buying euro. So they're always, how do I put it, against each other, right? I've been checking the cut reports for a very long time now, and it is not always balanced. If the non-commercials are buying, the commercials are going to be selling, right? The commercials are doing the opposite um of what what the non-commercials are doing. And this also just even further gives us the confirmation that yes, people actually, we have big institutions, we have big players that control this market that are buying and selling, and they are determining where price is going to go to, where price is going to stop from, where price is going to drop from, and all of those things. So yes, the Forex market is controlled by human beings like you and I. Okay, definitely. Yeah. All right, so if you need more information, you can just go and read more about it. Okay, definitely. So now let's come back to our main screen here, and we're going to be looking at the third topic, which says guidelines on how to trade like smart money. Okay, so now I have shown you that yes, who smart money are, and do people control the financial market? Definitely. Now, these institutional traders, how do they trade? So not like we know it though, but then not like we know 100% that this is how they trade. But from the understanding and study of previous price action, we've been able to come out with a set of rules that when we check out for, we can say, okay, if this is this and we see this and we see this and we see this, then therefore this is where price is going to get to. Now, at this point, this is where I'm going to give a big shout out to my mentors, right? I didn't come out with this checklist. I did not formulate this checklist myself. I learned it from people. Okay, so they made it easy for me. I didn't have to spend many hours trying to come up with a checklist. Right, so I'm going to give a big shout out to my first mentor, Franklin. He's in Canada, very amazing trader. So when I started trading, I learned he was my upline. So it was my direct mentor. So big shout out to you, sir. That's Franklin. And then also we have Toby. Toby is in the United States. So big shout out to you, sir. And then also we have John Phoebe. So John Phoebe, I actually learned a lot more about smart money concepts from John Phoebe. So big shout out to you, John. And then also I usually do attend Zach and Jordan session that is on Bounce Back. So big shout out to you, Zach. Big shout out to you, Jordan. And then also Steady. We have Justin Saney. So big shout out to you, Justin. And then we also have John Dollery. So big shout out to you. And then I have Jiggy Zoo. So Jiggy was one of the persons that actually gave the checklist, made it really easy for people like us to understand it. So big shout out to you, Jiggy. And yeah, I think those are like the the major people I can remember that I've learned from directly. So big shout out to all of them. Yes. So these people have made it easy. These people have made it very easy. And because of that, I can, teach it with ease. So let's give them some big shout outs. Exactly. So now, guidelines on how to trade like smart money. Hmm. Guidelines and how to trade like smart money. Exactly. So let's make this 24. So now guidelines on how to trade like smart money. Now we've been able to come up with a checklist. So when you follow this checklist, you should be able to position yourself trading alongside smart money. Okay, you will not trade like them perfectly, but you should be able to trade like the way smart money trades, right? We believe this is how they trade. Remember, I learned it from all of these guys I've mentioned, very amazing traders, right? Exactly. So now we have 5 checklists we use. Number 1 is the trend of the market. Okay, so number 1 is the trend of the market. That's it. The first thing you want to be able to determine is the trend. So let me come here and say checklists for trading. All right. Number 1, trend of the market. So you want to be able to know what the trend is. Is the trend, remember, I've taught you market structure. Is the market going up? That's a bullish trend. Is the market coming down? That is a bearish trend. Right? So you want to be able to first determine what is the trend. That's the first thing. Is it going up or is coming down? If it's going up, then I know I should be buying. If it's coming down, then I know I should be selling. That's it. Then other things, where do I buy from? Where do I sell from? All those things, you're going to know all of that. But the first thing you want to be able to determine is what is the trend of the market. So when you pull up your chart, you pull up Euro USD, or you pull up any other currency pair, the first thing you're looking at is what is the trend of the market. Is it bullish? Is it bearish? That's it. So the trend of the market. When you've determined that, number two is the range of the present, range of the present structure. That's it. So range of the present structure, because you cannot determine the range if you have not determined the trend first. That's it. So the trend comes first, followed by the range of the present structure. And then number three, can now talk about the Fibonacci levels. Yeah, we talk about now you've known the trend. First, you know the trend. Then, with the understanding of an idea of the trend, you can be able to draw your range. Now, after drawing your range is going to help you to spot your Fib levels. That is the Fibonacci levels. Are you buying at a discount level or are you buying at a premium level? Exactly. So now when you've been able to spot the range, the fourth thing is liquidity. Now, liquidity is number four. Then you start to spot the liquidity, because liquidity is going to serve as an important factor that is going to engineer your trade to going up or coming down. Liquidity is very, very important in the Forex market. When we get there, I'm going to be explaining a lot of things about liquidity, the types, the forms, and everything about liquidity. Everything to my best knowledge, though. You understand? There could be more. All right. So liquidity number four. I'm going to be explaining it to you. So first thing is the trend. When you get a trend, you know what the range is going to be. When you know what the range is going to be, you will be able to draw the Fibonacci levels without issues. And then when you do that, you should be able to do number four, but you should be able to check and see number four, the liquidity, the internal liquidity, the external liquidity, right? The static liquidity. So once price is taking out internal liquidity, we can hope that and anticipate that smart money will run on the external liquidity. Because like I said, all these things is a checklist we've built around trading close to the institutions. So when we're getting on trades, we want to get the best entry possible, right? With a very little amount of drawdown. You see it? That's it. We're not going to be using any indicator. We're not using any indicator, moving averages, or this RSI to determine when to get in, right? No. You're going to study price action. You're going to study the candles. I want you to study the candle until you and the candle become one. And then when you open up the chart, it is as if the candles are talking to you. They're giving you information. You're taking information up into your head. They're processing it. Okay, what is the candle trying to tell me? Yeah. What is the candle trying to tell me? Yeah. And all of that. Okay, but then it comes with hours of study and just getting better, right? So number four is the liquidity. And after spotting the liquidity, number five is now the institutional candle. Yes, which I divided into three. Again, like how I learned it from these guys I've called out. Very, very amazing traders, right? So trend of the market, range of the present structure, Fibonacci levels, liquidity, institutional candle. So number five is what we call entry, the entry candle. You see, entry candle number five. That's it. So the next series of call 14, 15, 16, 17, 18. I'm going to be explaining each of this checklist in one video to make you have a better understanding. And then at the end, you should be able to combine everything together to catch amazing trades like this. Let me show you this trade. We took this trade yesterday during a live analysis. I called out this trade yesterday. And NASDAQ, very amazing trade, gave us very, very good wins. So let's go straight to NASDAQ. And then come to NASDAQ here, then come to the 1 hour chart. So this was the trade. Now, don't you want to catch trades like this? You see, look at our entry. Very, very little drawdown. We got in here and we took price all the way to the upside. Now, even with the least lot size, you are guaranteed of $30 plus already. This is a sure guarantee of $30 and above with this trade, even with the lowest lot size possible. Then if you start to use a bigger lot size, depending on your account, you tend to make more. So you see, all of these things this entry was based off my understanding of smart money. And it was really an amazing call. Just played out well, got a move, got in here, and then I bought, price just went all the way to the upside, and we are all happy. As you can see, what do I have here? Liquidity. What do I have here? Liquidity. What do I have here? Liquidity. So you will be seeing that later on. Okay, and then the second trade I'm in, also Euro GBP. Very, very amazing trade. All right, first entry, second entry, just going up. Very, very amazing trade. Definitely. So you're going to be learning all of that and be able to trade like that. So these are the checklists. Number one, the trend of the market. Number two, the range of the present structure. Number three is the Fibonacci levels. Number four, liquidity. Number five, institutional candle, which is the entry candle. So the next couple of calls, I will be talking about this checklist one by one in one video. Trend of the market is going to be one video, range of the present structure, one video, Fibonacci levels, one video, liquidity, one video, institutional candle, one video. It's going to be an amazing, amazing call. All right, so that is going to be it from me for this call. If you have any question, please feel free to go to the question group and drop your questions there. I will attend to it immediately. I see it. All right. So I wish you a good day. Bye bye.